Cryptocurrency wealth, investing in Bitcoin for beginners. Welcome to our channel, where we explore the fascinating world of Bitcoin and cryptocurrency investing for beginners. Cryptocurrency, particularly Bitcoin, has gained significant attention and popularity in recent years as an alternative investment. This extensive guide will cover various aspects of investing in Bitcoin, including its history, basics, investment strategies, risks, and tips for beginners. Before we dive in, please ensure you hit that like button and subscribe for more engaging content. Part 1. Understanding Bitcoin. 1.1 What is Bitcoin? Bitcoin is a decentralized digital currency that was invented in 2008 by an anonymous person or group of people using the pseudonym Satoshi Nakamoto. It operates on a technology called blockchain, which is a distributed ledger that records all transactions on a public network. 1.2 History of Bitcoin. Bitcoin was introduced in 2009 as an open-source software. Its value was initially very low, but over time, it has gained significant traction, becoming a global phenomenon. It has experienced several price cycles, with periods of rapid appreciation followed by corrections. 1.3 Why invest in Bitcoin? Investing in Bitcoin holds allure for various reasons. Firstly, its decentralized nature presents a unique financial landscape, free from traditional banking institutions' control. This appeals to those seeking autonomy over their wealth. Secondly, Bitcoin is increasingly regarded as a digital store of value, akin to digital gold, potentially safeguarding against inflation and economic instability. Its limited supply of 21 million coins also contributes to its scarcity and potential price appreciation. Additionally, Bitcoin offers global accessibility, enabling cross-border transactions with ease. Furthermore, the growing institutional interest and adoption underscore its legitimacy as an investment asset. All these factors combine to make Bitcoin an intriguing and potentially lucrative investment option for many. Decentralization. Bitcoin is not controlled by any central authority, making it immune to government interference. Store of value. Some view Bitcoin as a digital gold, a hedge against inflation and economic instability. Potential for high returns. Bitcoin has delivered substantial returns to early investors. Part 2. Getting started with Bitcoin investment. 2.1 Setting up a wallet. Setting up a wallet is a pivotal step in your Bitcoin journey. Wallets are digital tools that store your cryptocurrency securely. There are various wallet options, including software wallets, which are convenient and user-friendly, and hardware wallets, which provide enhanced security by keeping your private keys offline. To begin, choose a reputable wallet provider, create an account, and follow the setup instructions. Remember to safeguard your private keys diligently, as they grant access to your funds. Your choice of wallet can significantly impact the safety and accessibility of your Bitcoin holdings. 2.2 Buying Bitcoin. Purchasing Bitcoin is the next crucial step in your cryptocurrency journey. To buy Bitcoin, you'll need to use a cryptocurrency exchange or a peer-to-peer platform. Cryptocurrency exchanges are online platforms where you can create an account, verify your identity, and deposit funds to purchase Bitcoin. Peer-to-peer platforms facilitate direct transactions between individuals. Choose a platform that aligns with your preferences, consider factors like fees, security, and payment methods, and complete the necessary verification processes. Once set up, you can place orders to buy Bitcoin at prevailing market prices, effectively becoming a part of the exciting world of digital currency ownership. Part 3. Investment Strategies. 3.1 HODL. The term HODL originated from a typo in a Bitcoin forum and has become synonymous with long-term holding. This strategy involves buying Bitcoin and holding it for an extended period, believing in its long-term potential. 3.2 Trading. Trading Bitcoin involves actively buying and selling the cryptocurrency to profit from price fluctuations. Traders analyze charts, use technical and fundamental analysis, and employ various strategies to make informed decisions. Day traders seek to profit from short-term price movements within a single day, while swing traders may hold positions for days or weeks. Scalpers aim for small, frequent gains, and long-term traders hold Bitcoin for extended periods. Trading can be lucrative, but it's also highly speculative and risky due to Bitcoin's price volatility. It requires continuous research, discipline, risk management, and a strong understanding of market dynamics to navigate successfully in this fast-paced environment. 3.3 cost averaging DCA. DCA involves buying a fixed amount of Bitcoin at regular intervals, regardless of its price. This strategy aims to reduce the impact of price volatility and minimize the risk associated with timing the market. Part 4. Risks and Challenges. 4.1 Volatility. Bitcoin is known for its price volatility, with significant price swings in relatively short periods. Investors should be prepared for this volatility and not panic during market downturns. 4.2 Regulatory Uncertainty. The regulatory landscape for cryptocurrencies varies from country to country. Changes in regulations can impact the use and trading of Bitcoin. 4.3 Security Risks. Protecting your wallet and private keys is crucial. Hacks, scams, and phishing attempts are common in the cryptocurrency space. Part 5. Tips for Beginners. 5.1 Education. Devote time to studying Bitcoin and its underlying technology, blockchain. A solid grasp of these fundamentals is key to making well-informed investment choices, reducing risks, and capitalizing on opportunities. 5.2 Diversification. While Bitcoin can be a valuable addition to your investment portfolio, diversifying across different asset classes can help spread risk. 5.3 Risk Management. Only invest what you can afford to lose. Never invest money that you may need for essential expenses. 5.4 Stay informed. Stay updated on Bitcoin news and market trends. The cryptocurrency market is dynamic, and staying informed can help you make better decisions. In conclusion, investing in Bitcoin can be an exciting and potentially rewarding venture for beginners. However, it comes with risks, and it's essential to approach it with caution, thorough research, and a long-term perspective. Remember that the cryptocurrency market can be highly speculative, so it's crucial to make informed decisions and consider your financial goals and risk tolerance before investing. If you found our content valuable, please consider sharing and subscribing, and give us a thumbs up to help our channel flourish.